Hello guys, welcome to thatstrading.com. I'm going to be going over a lesson on how to use Heikin Ashi candles and how we use them to trade intraday. Give me 1 second here while I find the video. All right, here we go. Let me share that with the team. Give me 1 second, guys. I hope everybody's having a great weekend. All right, without further ado, let's go ahead and start here. Again, this is being recorded for members, so if you don't get to see it today, you'll get to see it on whenever you have a chance. All right, so I like using the Heikin Ashi candles. Now it doesn't give you the accurate price action. Here, let me explain what the Heikin Ashi is here on Investopedia. And it says Heikin Ashi, also sometimes spelled Heikin Ashi, means average bar in Japanese. The Heikin Ashi technique can be used in conjunction with candlestick charts when trading securities to spot market trends and predict future prices. It's useful for making candlestick charts more readable and trends easier to analyze. For example, traders can use Heikin Ashi charts to know when they stay in trades while trend persists, but get out when the trend pauses or reverses. Most profits are generated when markets are trending, so predicting trends correctly necessary. Okay, give me 1 second. So this is the way the Heikin Ashi formula is created. All right, it's composed of a series of open, high, low, close candles set apart by time series, and you can get into all of this stuff and get all technical stuff. So it says the Heikin Ashi chart is constructed like regular candlesticks, except the formula for calculating each bar is different, as shown above. And you see the example here, and you can see the regular candles. They might get you out of a trade, while the Heikin Ashis will keep you in the trade. You see, okay. And then I'll get into how I trade the candles, based on what they're showing me. You can see here it's very choppy and the price action is up and down. What the Heikin Ashi will keep you in because we have flat tops. Okay, and I'll explain that in the as we go along. So if we go here to this chart, you can see, and a member asked me what are we talking about when he hears us live. And by the way, we do go live on our Discord channel. So in the mornings, if you go to our Discord here, you can go to live commentary and click on here, and we're live, the first 2 hours of the market, sometimes a little bit more, and then often we come back for power. So you can listen in while we're taking live trades here. Anyways, and so one of the members asked, and I thought I would make a video because I think as new members joined, or they want to know how is it that we trade the Heikin Ashi candles. And what do I mean by flat bottoms and flat tops? And this is basically a flat bottom, and it gets confusing sometimes because you say flat bottom and yet we're going up, and when you say flat top, it means we're going down. So it kind of tricks your mind a little bit. And sometimes I say flat top by mistake, and I tell my members, I'm sorry, I meant flat bottom, because we're kind of going the opposite, and your mind sometimes has a hard time comprehended. But flat bottoms going up and flat tops going down. So a flat bottom means that momentum is going to the upside, right? And flat top means that it's a shift of momentum and we're going to the downside. And it's pretty simple to understand, and it's very visual to see when trend changes. And this is what I called a indecision candle, or Heikin, or doji candle. But I like my doji candles to be small and a perfect cross, right? In this case, it's a little iffy, but it works also, right? And I'll show you real examples right now. But this is all you need to know. When you get a flat bottom, the possibility of the momentum going to the ups, that it's going to keep trending to the upside are very, very strong. And when you get a flat top, the possibilities of the trend continuing to the downside are very, very strong and likely. And so that's why I like using the Heikin Ashi. And it works better on larger time frames. I often use the 10-minute, the 15-minute, for intraday trading, and it works like a charm. Okay, I have a member here who for the most part, he trades this system, and he'll wait for a flat top or a flat bottom, a flat top or a flat bottom to form, and then he'll play the retracement of that, and then get a really good entry, and then just trade that momentum. And I'll show you what I mean by retracement as we go on. So this is basically what it is, guys. And if you're playing regular candles, you might get stopped out of all the choppiness, but using the Heikin Ashi candles will kind of keep you in the trade, right? So as long as you keep making those flat bottoms. This one was a little bit iffy, but in this regards, we look at the volume. How did it close? It's a green with green volume. It's a green with red volume. That would make a decision of whether to stay in or stay out in the trade. So you can't just solely rely on this. You got to also look at the volume, and that's something that I'm gonna show you guys as well as we move along this lesson. And so this is it. I mean, this is what a Heikin Ashi chart looks like. You can see the difference here. Let me so you can see how here you can get really chopped out, but in the Heikin Ashi chart, you stay in the trade, right? You stay in the trade. Maybe you get out here depending on how the volume looked, and the same thing on this one, right? I would get in on this one on retracement, and then play this to the upside, and depending on what the volume shows here, might get out. Same thing, right? This is doji right here. You get out of this trade, and you get a first flat top here. You trade this to the downside. If this one closed with red volume, we stay in and we continue, right? So same thing to the top. Look at all the flat bottoms, flat bottom, flat bottom. This one, look at the volume, see how the volume looks there, and I'm gonna show you real examples. Is the volume green? Is the volume red? But it's the volume is fairly small red, to the previous volume bars, which means the bulls are still in control. And so that's when you make a decision whether to get out or stay in or take some profit. And then look at the flat bottoms as they continue to go to the upside, and that's how you stay in a trade, using the Heikin Ashi system versus this choppiness. Look at this. You might get in and out. Well, using the Heikin Ashi system, you stay in a trade for a longer period of time. Just trust in that. Again, if you look at the price action, sometimes you'll get you might get out of the trade, but you just have to kind of look at the candles and the volume, and don't look too much at the price, so you can stay in the trade. All right, so let's go ahead and look at a chart here. And as a matter of fact, I have this Tesla trade, and we'll also look at the SPY that we posted on our Discord channel. And if we go to our Discord here, you'll see, let's see here. Yeah, you see right here, and I said the Tesla breaks and hold 225, price target 227, 233, meaning, you know, I'm looking at this rising wedge here, and I said if we break this, you know, these are our targets, right? If we break down, these are our targets, and so whichever we break, that's what we're gonna play. And so it requires a little bit of discipline to kind of wait for that. Sometimes right at the open, we kind of get in, get faked out, and then we think back and we're like, man, we should just wait for confirmation, right? I wouldn't have taken that trade. And so here it is. Here's the charts that I post in the morning, especially if you're a new member, you know, coming in and you're like, okay, I got the charts, I got the alerts. Now, how do I play this? I can't listen in, you know, while you're trading live. I'm at work, or, you know, I'm at school or whatever. What do I need to look for? I got the alert, I got the chart set up, I got everything, but now how do I take the trade? So we're gonna go over that here in this Tesla trade. So you already know, if we break to 25 and hold, okay, we are, you know, trading calls, and if we're break below, we're trading puts. All right, and then I'll make another video on you know, what calls to look for and what puts to look for, depending on your price range, right? Because you might have a small account, others might have a larger account, can go in closer to the money. If you have a smaller account, you might, you know, go a little bit further out the money, so you can afford, you know, a few calls, and vice versa. So I'll make up another video on that, but let's just stick to the alerts on how to trade the Heikin Ashi candle system. And so let's start with Tesla, and then we'll go to SPY, and then we'll try Apple there at the end. So this is the 3 alerts that I posted on Friday. And usually I'm always gonna use SPY and Tesla, because those are our main to go to. And why I always trade the same charts? Because you know, you're already familiar with the levels, the daily, the weekly, you know, the 4-hour, and you're already familiar with the price action. And you know, the sooner you realize that trading 1 or 2 is way better than looking at, you know, 6 or 7 or 8, you're gonna be more profitable because you're already familiar with the charts. And then third, I like to add a chart maybe that had news, maybe that has potential, has a great setup, you know. So I like to add a third one often if there's one that has some negative or positive news, and keep that one on just as a back burner watch, and you know, trade that one. Now, if it's really good news, I'll often avoid this first 2 and go for the third one, because it has some sort of catalyst that might move it, whether it's negative or positive news. So, all right, let's get to the chart. So this is Tesla. This is breaking to the upside. This is breaking to the low side. Now look at how we get faked out at the break of 225. So remember, I said the break of 225, then our target. All right, but you can't just trade the break. You have to trade. I said end hold. So the end hold means that you have to wait for a Heikin Ashi candle to form. So if we go here to the 5-minute, you can see that the first 5-minute we get this big green ugly indecision candle that is going nowhere. And in the team, in the live chat, we kind of with some of the members that I trade live, we kind of call this double-edged swords, right? Why a double-edged sword? It's just a name that we made up. It doesn't really exist, because this can stab you in the front or the back, depending if you have calls or puts. This can go against you and stab you either way. So we call it a double-edged sword. And it's green with red volume, and you know, momentum on the TTM squeeze, you know, going down. Now, something to also remember on the TTM squeeze, you know, I often don't rely on it too much with smaller time frames, right? I rely on it more on larger time frames, 10, 15, the hourly chart, daily chart, and stuff like that. On the smaller time frames like the 2-minute, the 5-minute, which I use in conjunction to take a trade. In this case, you know, yeah, it was perfect, right? But in other cases, it'll keep you out of a trade. You know, it's all over the place. Using in smaller time frames. Now, sometimes it works, sometimes it doesn't. So don't rely on it too much. Give me a second. All right. So this is the way Tesla must. You have to trade Tesla to get a profitable trade on Friday. Look at this, closed with a indecision candle, very, very ugly. The first 5 minutes. Then we got another one. Then we got another one. Finally here in this third one at 8:45. You know, this would be going into the 8:50. We closed with the with the first flat top. Now the only problem here is that we're above the 200 EMA on the 5, but we are breaking this uptrend that I posted in the charts. All right, so that's still not entry. Entry is this right here, right? And so I mean, you could have maybe, you know, it's all in your strategy, but you could have maybe, you know, on this candle right here, taken a small position, knowing that we closed with a flat top, right? It's our very first flat top. We have red volume, you know, bigger than the previous volume bars. So, I mean, the bears are in control. Momentum is to the downside. So maybe you could have gotten a starter there, right? It's really up to you and how you build the system. But to me, I want confirmation. I want to be under the 200 EMA, and I want to be in a flat top. Now, something that I sometimes what I'm often using, especially at the open, is not the 5 minute, but I'm using the 2 minute. So we go to the 2 minute here. Okay, let's go to our. What up? All right, so where's 8:30? Again, this is not a flat top. You see that the little wick on the bottom, so that's very important that you see that. All right, it needs to be flat, right? And then we have our first flat bottom. I mean flat top. You see how you get confused because you're going down or up right here, but again, you're under over the 200 EMAs. And so that's somebody asked me, why is it that on the story that you post on social media, you mentioned about the flat top and the two, and this is the case. So I don't like to trade anything under the 200 EMA on the 2 minute to the downside, right? I want to wait for a candle to close on the 2 minute, for a flat top under the 200. Okay, under the 200. And if I'm going long, I want a flat top, a flat bottom, I mean, to close on top, right, of the 200. So if this is sample, again, this is pre-market. It could be this one. I'm not sure if that was a flat bottom, or it could be this one for continuation, right? And this is a big move right here. This is a huge move. You can make a lot of profit here. And so anything else that's not flat top, flat bottom, you stay out of it. And so if I'm trading the 2 minute, I want to be under the 200 EMA, and I want to close with that flat top, right? Because we're going puts in this case. And so here it is. Here's the first one right there. I guess I drew my circle too big. So if I'm trading the 2 minute, which I love trading the 2 minute at the open, this is my very first confirmation candle, right? This one, because we closed under the 200 EMA. This one, okay? Now this is my entry point. So you could wait until you cross, right? This could be your other entry right here. You broke, okay, this is my entry. This is the alert that Miguel gave. We broke and we closed with a flat top, right? So there's a flat top, boom, and then boom, big flush to the downside, right? Again, these are key area pivot points that when I believe that we're gonna break, we're gonna get a big push either to the upside or a downside. But again, you have to break them with a flat top or flat bottom, right? In this case, we broke to 25, and I remember I was looking for this one. I was looking at this one as soon as I saw it with a little wick there. I said, okay, no trade. All right. So it needs to be flat bottom. So again, on this one, this could have been a starter, right? And they added more here, and then boom, got a big flush. So this would have been my entry. Could you have gotten in here? You could have. Could it have worked out? Maybe. But you know, the more you do that, you know, you're gonna get caught in a big bounce to the upside, right? Because look, we bounced off the 200, boom, we came back to the 200. This could have easily just bounced right back up, you know, and got you out of your position and took in a loss. And so it's very important that give me a second. It's very important that you wait for the setup, right? So, you know, enter the perfect entry is this one, right? Or you could have waited for that break for that entry. So as soon as you're in a trade, you know, you get this big push right here. You could be taking profits already. Look, it hit. We passed the first target, right? And now, so where's your stop loss now? So your stop loss is gonna be, right? If you entered on this candle, your stop loss is above this candle. If you enter on this candle, right, your stop loss above this candle, or right, the break of the 200 EMA, right? We start breaking, this could happen. So that would be the stop loss. So we hit target 1 again. You stay in a position until you know, we start reversing. So let me tell you how to use the 10-minute system, which is often how we often use get trades too. Okay, so this is a 10-minute Heikin Ashi system that we use and some of my traders use, and very, very profitable. As a matter of fact, one of my traders is doing a statistics on how many times he has won on trading the 10-minute candle, and it's very high. I believe it's above 90%. And we're gonna share it with the team. All right. And so basically, the way you trade the 10-minute is you look for a flat top, right? This is a flat top right here, right? And then we look for a retracement, right? A retracement to the upside of that candle. And you're like, what? Right? Because on the Heikin Ashi candles, right, when this closes with the flat top, right, usually you're gonna have price action come back to about the middle of that candle, and then keep coming down. Come up to about the middle of the candle and keep coming down. Come up, come down, right? Until you get some sort of doji. See here, this is what I was telling you. So on the 10-minute, right, you get this indecision candle doji, but we close with red volume, right? So no reversal there, no reversal. We got a flat top with green volume, momentum still to the downside, no reversal. You stay in the trade, you stay in the trade, you stay in the trade. This one, okay, we got a doji with green volume, so possible reversal here. And then we got a flat bottom and flat bottom, right? So, you know, we would have been out of this trade, and then this gets very choppy because you get no continuation here on this one. So I think everything traded to the downside afterwards. So this one you get stopped out, this one you don't get stopped out. Again, the stop will be above if you're trading the 10-minute system, Stop will be above the first 10-minute, and you can see never got stopped out, and they flushed to the downside. And so let me show you the retracement now here on the 10-minute. So this is a flat top, right, candle. This candle closed at 850. Okay, let's go to the 1 minute. So 850 going to 9 o'clock. So this candle started from 840 to 850. Now let me show you here on the 1 minute really quick. And see how that retraces. So let's draw our big 10-minute candle here. 850. Where's 850? Okay, 850. So the candle closed from there to 840. This right here. So let's change the color on this one. Edit rectangle 1. Where's the rectangle show? It's rectangle 2 probably. Yeah. So this is our 10-minute flat top. Okay, using the 10-minute. So now we're in the 1 minute. Okay. So as soon as the candle closes, you can see the push here. This one didn't push that far up, but you can see the push all the way up to about right here, 220. Right? So 220. So we came down. Oh no, I'm sorry. It would be this one. Yeah, 220.25. So let me remove that. About here. Right? So we came up about right here and then kept pushing down. So let's get the other 10-minute candle. No. So that retracement was not really good. But let's see the next candle here. This next flat top closed at 850 to 840. Oh shoot. Yeah, I retraced the wrong one, guys. Look, I'm retracing this one. No. That's why I didn't retrace. Sorry about that. It's from 850 to 840. No. It's from 850 to 9. Sorry. All right. $8.50 to 9. That's how that candle closed. So we go to 8.50, which is right there. This candle right here, 2.9 right here. This is the flat top. I'm sorry about that. And now you're gonna see the retracement. Okay. Now you're gonna see the retracement. And so this is the 10-minute candle, right? From right here to down here, you see the square. This is a 10-minute candle from 8:50 to 9 o'clock. Okay. Now look at what happens after 9 o'clock. So the candle closes, comes back. Look at where it comes back to about the middle of that candle, of this square. See that? So it comes back to the middle of this 10-minute candle. This is a 10-minute candle right here. Right here, you see this square? Where does it retrace to? Right to the middle of it. See that? The 10-minute candle, flat top on the 10-minute. Now we're looking at the 1 minute. It retraces right to the middle. And so you do this on the contracts too. That's often why we get contracts at really good price, is that we get the retracement and then boom, flush to the downside, right? Flush to the downside. And all these are ending with flat tops on the 10-minute. So even though we got some green candles here on the 1 minute, you know, on the 10 minute, they're still flat tops. So there you have it. That's how we do a 10-minute retracement. All right, so you could see here, if you're following the 10-minute, flat top, flat top, flat top, flat top, flat top, flat top, flat top. Right here, you could, you know, take the profit if you wish, but again, we close with red volume, hit target number 2, and you know, this got really choppy and ended up hitting target number 3 later on in the day around 2:20. So pretty simple, right? So now let's look at SPY. Since we're already on the 10-minute on SPY, let's look at give me a second. All right, so here's the first flat top on SPY. Red volume, momentum to the downside, boom. Right? So this, I see this and I say, okay, this definitely has room to the 200, right on 10-minute. And of course, we kind of broke it like butter, but so let's go ahead and see that closed at 9 as well. So let's go to the 1 minute. Where are we at? So let's draw our 10-minute candle here. It closed at 9. Right here. Here's our first flat top and 850 right here. So this is our 10-minute candle on the 10-minute. Okay, right here. Use the 1 minute. Now let's look at the retracement again. Look at where it goes from here to here, right? This is the middle of the candle of the 10-minute. You can see it came to test it, and then what happened? Big downside. To the downside, right? And so from here, 365 to 360, that's a $5 move right there. So a lot of money can be made here in this move, right? All because you played the retracement of the 10-minute, right? The 10-minute, it's a flat top. I'm just drawing it here so you could see, and you could say, oh man, I missed the big move. No, the big move hasn't happened yet. When you get a flat top, you know, you follow through usually with another one and another one. All right, so you know, again, if we go to the 10-minute, no. And we look for a first flat top for entry, this is it. Right? But look at the charts. You could see here. First flat bottom, you get continuation to the top. You're at least gonna get a move to start taking profits, guys. And that's very important. Whenever you get a flat top, you're at least gonna get a nice following move to start taking profits, right? And then let the rest ride. You see here, first one, you know, take some profits, let the rest ride, see if you continue. Here you go, first flat bottom, you know, take some profits along the way. This is the 10-minute, and that's often why we rely on the 10-minute for an entry, you know, more often than not, because the risk to reward are, you know, it's very good. Okay, there's very little risk and there's high reward using the 10-minute. Sorry, I was away from the mic. I don't know if I was too far, but there it is. So if we go here to the SPY, it says if we can break and hold above 373, this is the targets. That's what I'm talking about. If we can get above this trend right here and hold. When I mean hold, I mean close with a flat bottom going to the upside. If I ever say if we can break and hold, that means closing with a flat top to the downside. Then these are targets, right? 360, 353. And you can see here 360 we hit target, and you can see how these pivot points you know, respect the levels. This is what I gave you, and this is where we came to, and boom, we bounced up. We, you know, consolidated here for a little bit, and then continue down. Again, you can see the first flat top here. This is not a flat top. You can see a little thing here, but this one again, kind of choppy price action. Could have got you out, but you can see you continued even down lower. As long as, if you ever get in on a flat top, your exit is above that flat top. Same thing with the flat bottom. If you get in on a flat bottom and you're waiting for a retracement, wait for a retracement, and your stop is below that flat bottom, right? Your stop is above this one. What other one? My stop is above this one or this one, right? And, you know, just so forth. Again, under the 200, I don't like trading long, and above the 200, I don't like trading short. So keep that in mind, especially on the lower time frames, like on the 2-minute. And let's go ahead and go to the 2-minute here. The open, I like trading the 2-minute, and I like to wait for a flat bottom or flat top under or above the 200 EMA. So market opens here. This is the market open. This is 838. Again, the target was 373. We got above 373. Then we enter. Of course, we had to close with a flat bottom. We never got there. Okay. And then the entry was if we break below 364. So 364 is 364 right there, right here. Okay, 364 right here. We broke, and we broke with a flat top. Also, we broke in this area under the 200 right here, flat top. So this would be our first entry. Again, stop loss above that flat top. You can see we never got above, right? And we continue down. And remember, by this point on the 10-minute, yeah, by this point on the 10-minute, we have a flat bottom. We have this right here. Where's 840? No, 850. Sorry. Yeah, right here. And so at this point, we have already a flat top on the 10-minute, right? And so flat top on the 10-minute, and we have a flat flat top here at 9:02, the first 2 minute on the 10 minute. This you know, a perfect signal to the downside. So you get a $5 move here. So you trade it. I mean, you could get this move right here, right, and be you're done for the day. You're done for the day. And so it is important that you wait for the first flat top, flat bottom, you know, especially if you like to be a little bit conservative. Let's say you only get one play a day. That's all you could do. Is I would wait for the 10-minute candle to close. Either you're going to take it for a put or for a call, because those are almost guaranteed to make you money. Now, not everything is guaranteed, right? In the markets, they can go against you. Some type of news comes out, and it'll just go against you in a minute. But the 10-minute strategy, usually, you know, 90% part of the time will continue with another flat top or flat bottom, especially if you have the TTM and the volume going your direction, right? And so this is where you can use the TTM, a squeeze, right? Mine's momentum squeeze, but it's the same. If you put the TTM squeeze, it's the same way. And so, you know, you get your first flat top here. You have red volume, previous red volume. You have momentum coming down. I mean, it's a great entry. You can't ask for something better. You know, here too, this is pre-market, but again, again, we're under the 200, so I don't like to take anything long to the long side up under the 200. Let's go to Apple really quick. This is my last one. Look at how choppy it is at the open. First 30-minute candle, you know, indecision. Now we close with a flat top, red volume, you know, momentum, losing momentum, going down, flat top, flat top, flat top, flat top, flat top, flat top, right here to 950. You could have stayed in this trade and made money. Look at all the flat tops. Again, this is what I mean by that little green volume here. Close with a flat top, momentum still showing to the downside. You know, stay in the trade. You can also use the 5-minute. Again, the 5-minute sometimes will chop you out of a trade, but you know, it can work too, especially at the open. Right, you get the first flat top. You know, you follow through. Again, the momentum on this one looks perfect, but it doesn't always look like that. Sometimes the momentum on the 5 is all over the place. Sometimes it works perfectly, sometimes it doesn't. So I like to rely more on the 10-minute. All right, guys, so that's basically it. That's how we use the flat tops and flat bottoms. Hopefully is you know, it's beneficial to you. Again, when we get this first flat top, we have our chart with the contracts, right? And let's say the contract price is on Apple, you know, we're getting a call that's maybe between $1 or $2. You bring up the contract price on another chart, you know, and you retrace that candle to the upside, and it'll give you an entry pretty close to about halfway or where you want to enter the price. If this went from $1 to $1.50, the entry price might be about $1.25, you know, and you close that at $2, $2.50, $3, whatever, right? And that's how we get those retracements using, you know, the equities chart along with the contract price charts. Okay, now just keep in mind that sometimes it will be a flat top here, and on the contract price it will not be a flat top, right? So don't pay attention to the contract price. If it closes to the flat top, great, it aligns, but if it doesn't, it's okay. As long as the equities, it's a flat top or flat bottom, this is all that matters. The main chart of the equities, the contract price chart doesn't matter. I do use Heikin Ashi candles on the contracts as well, and the reason being, it's you can visualize it better. You know, you don't get chopped out of a trade, and so you stay in a trade. All right, guys, so that wraps it up for the lesson for Heikin Ashi candles. You guys let me know what other lesson you would like to, you know, have, and I'll start making more like this so you guys can, everybody can be on board how we trade our systems, and you know, keep it going for the team. All right, see you guys tomorrow. We should have a good day tomorrow, and stay patient, look for the setup, and let's kill it. All right, team, that's pretty much it. So that's trading, that's how it goes. I'll see you guys on the next one. Take care, blessings.